Good morning. Today I'm in the process of setting up my trade. I closed all my trades from last week and I'm in the process of setting up a number of trades for the next cycle of trades that I walk through in simplified options. As someone who is new, the way you would attack this would be you would go to the resources tab and look at the instruments that have been researched that fit the strategy. So you come to the resources page and there's quite a few cool resources on here that we use throughout the process. Go to the trading instruments chart, scan through those and grab all of the instruments. From this point, we'll then go to the charts and find the specific information as defined by the strategy on which one of the instruments best fit for today's trade. One note before we walk through the setup on this trade: please do not attempt to put this trade on unless you have gone through the entire program of simplified options. What I'm showing you is for demonstration purposes. If you don't understand all the nuances or have a grasp on everything that's going on with this trade, you may end up in a dangerous situation. So please, I beg you, do not put this trade on unless you have a complete, full understanding. This is for demonstration purposes. This is my trade. Fair warning, but take a look at it because it turned out to be a thing of beauty. So after reviewing all of the information, all of the parameters that simplified options teaches regarding the probability of success, the IV percentile, the IV rank percentile, average true range, I decided to use the NDX and MNX. Now you will already see that there is a order placed here, a limit order, and as I was doing the recording, I didn't want to miss this trade. It was a thing of beauty as I began to set it up to do the recording, and I didn't want to let it go, so I already placed the order, but I'm going to walk through it again, and I'm going to use the MNX, which is just a derivative of the NDX. Note that the NDX is trading at 3,583. The MNX is 1/10 of that. You simply divide it by 10, and it's a very similar instrument. It trades at a lower average price, a lower price. And what it allows us to do, as it's loading here, what it allows us to do is to trade in a smaller account size because we can look at and use different strike prices. So it allows us to trade smaller and with the same amount of return on capital. We're going to look at the NDX. I'm going to walk it all the way through that so you can see the beauty of the trade. So looking at this and just looking at the support and resistance. Now, I'm not a big fan of technical analysis and support and resistance, but already having looked at where I want to place my strikes, I know that I want to put the NASDAQ somewhere between 3745 and 3400. Somewhere in this area, and I'm going to go ahead and adjust this. Let's move this. Again, this is my platform. My platform is amazing. It's Thinkorswim, and if you have the ability to get a hold of this platform and use this platform for your options trading, it is one of the best. Not to say that you can't do this on any other platform. You can. There are some great tools on some other platforms that even if you can't get an account with Thinkorswim because of the country you're in, you may have to go with Options Express or Interactive Brokers, which is fine. The work that I'm doing here can be done very simply on a piece of paper, pencil, and walk through it if you don't have all of the neat analytical tools that Thinkorswim does, that TOS, we'll call it TOS, Thinkorswim does. So let's go ahead now, and again, I already ran this straight through because I didn't want to miss it. Looking at, again, the average true range, the IV rank, the IV percentile, the probability of success, and then even now looking at this from a standpoint of just simply support and resistance and where the NASDAQ sits in between. It kind of looked too sweet to me to have to go through this entire recording to get the trade kicked off. So I did kick it off. I'm waiting for it to get filled. I may adjust it if it doesn't get filled relatively soon, and we'll talk about that as well and how you adjust the trade to make sure that you get filled. It's more of a negotiation. So let's take a look now. We've come up with some places where we want to set our strikes. We want the NASDAQ to stay between. That is the concept of the trade. It's non-directional. We want the NASDAQ between now and May, the expiration in May. I believe it's May 17th or 18th. And we'll see exactly what that is. we want the NASDAQ to stay below 3745 and below 3400. Now I may adjust these as I set the trade up, the 3740, 3495, I'm sorry, 3395, 3405, but just get a sense of how the trade sets up. Go to Analyze, and you can see my trade is already in there. So we're going to go ahead and unclick all these. We're going to set the trade up from scratch. And we're going to do an add a simulated trade. And we said that we want to look at 3745. So we're going to go right to 3745. We're going to click on a sell. We're now going to adjust the bottom of our spread of our iron condor. We said it was 3400. Let's move that down there quickly. Get to 34. And we want to put our protection on right below it at 33.95. Now, when we're talking about this strategy, the strategy is we don't want to have unlimited risk. We want to control our risk as well as our profit. Here we're looking, we have a dollar credit on this trade. 37.45, 37.50 is our top side. Let's go back to the chart. 37.45, we put our protection above it at 37.50. We said our bottom was at 3400. We don't want the NASDAQ to go below that. And 33.95. There it is right there. And we're going to get a dollar credit for that trade. Now, note that the buying power effect is $5,000. Note that I'm trading 10 contracts. We can reduce that. We can make it one contract. And note that the credit is changing. We're in a live market situation, so it's moving on us up and down. Note now that my buying power risk is $500 and my max credit is 95 cents. Of course, it's multiplied by 100, so it's $95. So what I can make on this trade is $95. What my risk will be would be $405. We'll take a look at the risk profile. It should show that. Here we have max profit at this top line of 95. Max risk right now is 400 because the credit jumped up. So it's a live market. So as this number is moving, this credit, this is moving as well. Now the goal is this volatility collapses, in other words, as volatility decreases, and as time goes by, our trade will become profitable, more profitable, and more profitable. You see right now that it jumped up to $1.10, $1.15. So as the market's moving and volatility is changing and the price is moving, it all affects the price of the option. Now, we're trading options. We're not trading the NDX. We're not trading 3,582. We're not trading shares. We're trading an option, one contract, which technically accounts for 100 shares. Note that if you pay attention and have gone through the other points in the website, we take away the fear of assignment and exercising on a stock. We're trading indices. They are cash settled. Very simple, very straightforward. That is the trade. To place this trade, you would click Create Duplicate Trade and click it to go. Now I already have an order in. We're going to go take a look at that order. Waiting for it to get filled. Go to the monitor. Here it is. I want $1.20. When I put my trade in, it was setting at $1.20. I may need to adjust that down. Right now the mark's at 120. When I say adjust that down, I want to get filled on this. I'm willing to go as low as $1, but why not take $1.20 if I can get it? Which equates to, on 10 contracts, to $1,200. When you do that, two things happen. Of course, you maximize your profit. Your percent on your return on capital is greater, but your max risk and buying power effect is reduced as well. And we'll go through that math as you become familiar with the process and exactly how those are calculated, what the credit is, what your effect is on your max loss as it relates to the trade. That's the setup. I've placed this trade. I'm waiting for it to get filled. It may get filled right as we close this. We're getting close to it getting filled. I think it might happen here soon. But that's the trade, guys. We'll go back to the chart. I'm going to leave the numbers as they are. That is the trade. I'll take my pictures of it, put it in my folder, and have a great trade. Guys, have a great day. If you have any questions, you can reach me at simplifiedoptions@gmail.com. Talk to you soon. Have a great day. Bye.